Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, April 23rd, 2008. Well, consolidation continued today for the most part across the board, although we did see technology extremely strong, and that was worrisome. You guys that are with us in the chat room and that have followed these videos know that before main numbers, we always want to see the stock or the market trade lower. When it trades lower, it means that people are discounting those earnings and expecting less. And the same thing goes with the market. Whether it's the PPI, the CPI, a market that trades lower into that number means that people are a little more scared, which means they're bearish, in turn, which is a psychological indicator that means the market could go up. So, all in all, we take a look at Apple and Amazon today, and this is a great case study because of that. All right, today, NASDAQ is up 28 points at the close, and let me swing this out of the way here since we have our trend tool. And we all talked yesterday about how key these earnings were going to be from Amazon and Apple. And the negative to Amazon and Apple were this, and let me show you guys. Let's go to the daily chart, number one. Look at this move from Apple, okay? This is the daily chart, by the way. Very long, extended move up, very overbought, all right? Now, the negative here is this, folks. And this has nothing to do with a big drop on Apple. Apple's really not at this stage down much, and it may go up tomorrow. But the point being is, those of you that were looking for 20 or 30-point jumps in Apple, or even 10-point jumps to 15-point jumps in Apple, it's not very likely because you're factoring in really amazing earnings at this point, and Apple came out with solid numbers, don't get me wrong. But the fact of the matter is, it's trading down a couple dollars after earnings. And again, that has to be expected because you have to factor in the bullish sentiment. As this goes up, more and more amateurs get bullish. That means earnings have to perform even better. They used to have to do just this good over here. Now they have to perform up to this level, which is maybe, $2, $3, $4, $5 a share, whatever it may be. But ultimately, it's a psychological nature of this market. And markets are extremely psychological. You guys know we preach that up and down, along with our key technical analysis and proprietary techniques. And in any case, what this told us on the chart going into today, especially when Apple was up $2, by the way, here's where Apple closed. Actually, here's where it closed, and here closed yesterday, and here's where it closed today. So you see it was actually up on the day, up a couple dollars. Going up into earnings is not necessarily a good thing either. It's not a case and point, meaning that it's not 100% guarantee that it drops, but it's a fair indicator that they have to outperform earnings. So, again, case study, Amazon.com. And I'm doing this before because it's more important for us as we learn and as you guys pick things up in the markets to understand. Case in point, Amazon.com. Yesterday, closed here. Okay? Today, closed here. We'll draw that connector, and you can see it was up going into earnings again. That's a negative. We take that as a negative. In addition, stock was here going back to March 1st. Now we're in late April, and it was right up against the 200 moving average. Chances are, how much more upside in this market when you've seen a run like this going into earnings? All right, so good earnings have been factored. The higher it went here, the higher earnings had to perform for it to keep going up. So every pay here I'm drawing in is another level, let's say, where it has to outperform. Ultimately, it was here going into earnings, and the earnings are dropping the stock. And you can see here, let me go to Amazon's level 2, and you can see Amazon.com closed at $81, now trading at $77 and change. So my point here is purely a psychological indicator along with charts. The chart right here is not a good chart. You're going right into key resistance at the 200 here. You have a big extension move. You have a move down here, which was a bullish move into the 20, but then it moved all the way up into here, which is a negative. You look to be short here. Obviously, as I always say, we don't play into earnings, but this was a bearish chart as well. All right. So, long story short, folks, these stocks aren't getting crushed. It's not like, we're having a 100-point drop in Apple or anything like that. It's just a small pullback in Apple, a couple dollars down right now. And Amazon's the same way, down about $4 after earnings. Apple's actually only down $1.50 right now, which is nothing big. But my point being is you can't look for extended moves off of that. All right, enough of that. Let's get into the markets here, and we'll go to the intraday chart. And the intraday market was nothing more than choppy today. Very choppy with big moves up, big moves down on very light volume. That's what it was, folks, and it wasn't that spectacular by any stretch. The Dow was up 43 points. The NASDAQ was up 28, which is a very nice move on the NASDAQ, but again, we discussed how that was actually a negative for earnings after the bell today, and the S&P was up 4 points. All right. Now, what you can see here on the intraday chart is it's just choppy. You can see the patterns here going right into this necktie right here, which was a short, and you had a nice bull push, but look at this topping tail. All right, let me take this away as well. Topping tail right there. Traded sideways for a few bars, but when it broke down, wow, did that fall. Falling all the way back down here. Then you got a nice little tail on the bottom, which was a buy signal. But long story short here, folks, this is just a choppy market. Not paying a lot of attention to technical levels, except for a few places like right here, where it came right into neckties. Neckties worked out well. Here it came right into the 200 MA and pulled back into the close. So again, folks, a choppy market on the intraday level, but let's really focus in on the daily charts now. All right, we're flipping over to the SPY, which is a good indicator of how the S&P works here, and we're going to look at the daily chart. And you can see it's more consolidation. That's all it is, folks, is we had the big move up here. Now you're seeing continued consolidation. What we're thinking is you have probably a little more upside. And we mentioned the majority of the move, and I've said this in multiple videos, is in already. We call the market as a bullish push right here once that Bear Stearns news came out. As soon as we saw that news and everyone panicked, that was the buy signal. That was the flush. Then you got the nice push up all the way to this point. At this point, you may have a little more upside, possibly upside to here or to here, but it's very likely before we see that, you'll see a pullback into this 20 moving average or the 50 on continued consolidation. Okay? What we don't want to see, obviously, is a break below the 50. Basically, you don't want to see a close below this point right here. This should be support in this case right at that station on the chart. And again, you can draw actually some key levels in here. Notice the chart as it connects to the bottoms of these levels, and you'll have good support right in here, which equals the 20 and the 50. I mean, that's all it's just showing you, is it's showing you extra support line right around this 20 and the 50 should we pull back into it. And we'll see if that happens tomorrow, you know. It really depends on where Apple opens up tomorrow. Apple is a big indicator for the overall market. If it's up huge, the tech stocks will rally huge. But again, we've had a monster move, and I want to show you the NASDAQ. Remember on the NASDAQ, again, just like a stock, the NASDAQ is trading. You have to assume that's the way it goes. You had the NASDAQ closing here yesterday, closing here today. That's a bullish upside move, and we're looking at the intraday 10-minute here. So the NASDAQ, as we said, was up 28 points. Now that's going into earnings that are going to be some of the major earnings for the year, which are Apple and Amazon. The only other big ones are really Google, and you can look at maybe Microsoft, but even Microsoft isn't as big as Google these days. Research in Motion is one of the big ones as well for the tech stocks. Those are like, you know, what Kramer notes as the four horsemen. And overall, we're not a big fan, but he is very entertaining, but overall, we're not a big fan of him. In any case, folks, long story short, you had the up move there, which factored in even, you know, raised the bar even more for earnings. And these companies can only perform so high. And remember, folks, we're virtually in a recession. Now, the government hasn't admitted it by this stage of the game, but a lot of us that have seen rice, there's rice shortages, by the way. I heard about this. Sam's Club and Costco are limiting rice purchases because of a rice shortage. I mean, it's unbelievable to know what's going on out there and realize that across the world there are riots going on based on food prices being too expensive for people to buy simple food items. And in any case, the inflationary concerns in the United States are very strong in my book, especially when it comes to food and energy, because we've seen the USO just skyrocket. I mean, look at the USO on the daily chart. A huge move up here. This, honestly, it's getting very close to a top, if not at a top in the near term. This needs to pull back to the 20 moving average. The dollar has fallen substantially and maybe near a bottom. The OIH is at the oil services, and you can actually see that that's beginning to correct. Now, this could also be a pull down before one more push up, so we have to really note that and realize that this is actually a consolidation pattern. The only negative is look at how far that's run. All right, whether or not this has one more push up, maybe to 215 or so, who knows? But at some point, it's got to come back into this 20 moving average, and I think it's sooner than later. The more I hear the psychological level in the markets being bullish on oil, people talking about going to 120, 150, 200, the more that makes me assume that the oil is near a top here, and these need to come in. Just way too extended at this stage of the game to be long, and it is a risky short without a doubt. But it's at this stage you got to assume. I would think that in the near term it's a better short than long. All right, so that's one thing to keep an eye on. Also, gold was down today about $1 on the GLD. Gold was down, I think, $15, $17. I'm not sure the exact number, but it was in that range on the gold spot. But the GLD was down $1, and this is an interesting chart because you're actually seeing the pullbacks happen here. And notice the resistance right in here as it moved back up into this resistance point. You have the 20 and the 50 moving average being resistance, and it's beginning to fall lower. You'll have good support. Let's see. Good support right around this point here, and then obviously we break that, and you could see as low as, I suppose, the 200 as it continues to rise, and the 200 will creep higher as we go. But anyways, gold and oil, they're very basically a nature of the U.S. dollar. If the dollar gets stronger, they will fall in tune with that, although oil does have a little geopolitical risk involved with it. But for the most part, I think that's factored in. So it's an oil issue at it's a dollar issue at this stage of the game and should be viewed as such. So if the dollar strengthens, oil will fall, and we now want to focus in on the dollar. Taking a look at the UUP, which is the dollar index here, folks, you can see it's been in the lower end of this trend here on the UUP. It was actually up a little bit today, and you can see here to here, and you also saw basically oil flat on the day, but gold did drop as the dollar index strengthened a little bit. So we're going to keep a close eye on that. But long story short, watch for consolidation to continue as we set up for maybe one small move up, but then we're going to have a turn date coming in shortly, folks, at the beginning of May to late April here, and we'll keep you posted on that. Come join the Swing Trade Alerts, the intraday stock chat, the options alerts, and the institutional consulting. Take care.